Is a black swan event just about to hit? We have to explore these charts, guys. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. And what I'm seeing in the charts in regards to the debt markets is very concerning. All right, this is specifically in what is going on in Japan right now. The mainstream media is not talking about it. You're not seeing it on social media. I bring you this because I study the charts 24/7 looking at what is going on. Let's dive right in. So what we're going to do is we're going to make the case based on chart analysis. First, this is the dollar yen. Now, the dollar yen, as this chart goes higher, it's telling you the yen is weakening significantly against the US dollar. Take a look at this trend line. We had a breakout on the dollar yen. I'm going to tell you why this relates to the debt markets, okay? So what do we know about when people lose confidence in the ability of a country to pay their debt? Number one, interest rates go up, right? Because other people won't lend them money unless they get more interest on that loan to compensate for the risk. And number two, the idea is one of the ways to get out of paying a debt or pay down a debt is to print money. And that explains why we're seeing the yen weaken so significantly against the dollar, okay? So that's number one. Here you can see on the technical chart, beautiful high pivot here going back to 2024, high pivot here into early 2025. We tagged it, we broke out, retraced to the scene of the crime, and now the yen is weakening by ripping up here. The dollar yen again advancing very quickly. Look at just in the last few days, this move right here. In the currency markets, this is a huge move. If you trade currencies, you're paying attention to this, no doubt about it. All right, there's more to it, guys. Look at the Japanese 10-year yield. The 10-year yield is spiking over the last 4 trading sessions, breaking to the upside dramatically, now nearing 1.8% on the 10-year. Now, that may not seem like a lot to us here, but when you're in Japan and you're used to interest rates being negative, that's right, folks, they were paying you, all right? They were paying, basically, if you were stashing money, you had to pay them. You weren't getting interest. I mean, think about the ludicrous nature of that, but that's what we were seeing. Look back here. If we go back into 2023, right back here into 2022, look at this. Negative interest rates. COVID era, and actually before COVID, negative interest rates, negative point, basically 0.3% interest rates. And you can see for the longest time, it was basically flat, no interest. Then all of a sudden, look at this vertical move. It's only accelerating right here. Now, this is a big deal because Japan has the biggest debt to GDP of any country out there, at least any major country. Okay, so if we flip over to this chart here, this is government debt to GDP. Now, if you go to the US, we can see the US is 124.3% debt to GDP right now. If we go to Japan right here, it is 236.7% debt to GDP. Now, the reason why this is important is that when you have that much debt to GDP and interest rates go up just a little bit, your interest payments are almost insurmountable. Okay, folks? So that is what Japan is facing here. Now, we've seen this in the past. In August of 2024, there was a big issue with the yen carry trade where the yen again was making major moves. The stock market here in the US dropped about 12% in a matter of 2 weeks. It was free fall pandemonium out there. And we're now at a point where there's even more debt in the system. If we think about the US, where we are with our US national debt, where the rest of the world is, right? Where there's no fiscal responsibility whatsoever out there. And ultimately, there's no want to be. And that is going to make it even tougher. And so the thought process here is that interest rates spiking, this could cause a black swan event in the credit markets, in the debt markets. And ultimately, with the yen doing what it's doing, the dollar yen, this spike up, interest rates spiking up here, we could be on the verge of something big. Now, listen, as we know with black swan events, there can be black swans, and then ultimately they can almost happen, and then they sometimes you see the interest rates maybe pull back. But this is something that every investor should be monitoring, because this could be that event that causes a literal 10%, 15% drop in the US stock market in a matter of weeks that catches every investor off guard. All right. And I know it sounds crazy. I mean, here, most of us are used to hearing about, oh, well, what's happening in the US markets, NVIDIA, right? What about the US debt scenario? What's the 10-year? But in actuality, this is a global issue because it can spread like a wildfire. That's so important to understand. If you start having issues in Japan, it's coming here to the US because the US debt to GDP, while better than Japan, is still ridiculously high at basically 130% debt to GDP. So again, it's the fire, the spreading of the wildfire that could freak out investors in the debt markets. We're already seeing it, by the way, in the banking stocks, right? How many banks have said, oh my goodness, we have these commercial loans that are going bad. We've seen a lot of the bank stocks struggle, at least the regionals. This is something that is not being talked about, and we've got to talk about it more. All right, guys, I just wanted to pass this information. Keep an eye on the dollar yen, keep an eye on the Japanese 10-year yield, and let's watch and see if anything starts to spread further. You guys have a great one as always. Thanks for tuning in. I'll talk to you soon. Take care.